Yeah, ready?
All right, we're rolling. At least I am.
All right. Well, welcome to Keys to Home episode. I think we're on five, six. Yep. It takes all types. We'll have to find out what that's about. I think Lance is going to tell us about what types we have going on. Oh, Lance, you got the scrolly thing working. That looks great.
No, I'm doing it manually.
Oh, well, good job.
So, today, actually, y'all will be viewing this on the 13th of January.
My lucky number.
Monday. But today, it's Wednesday, the week before, and we were just talking. We're under a winter storm alert. I can't even really remember being under a winter storm alert. But this one looks pretty serious. We've got a big Arctic blast coming down with no precip. It's going to meet up with a big Gulf of America precip event.
Right, bring out the trolls.
So there's a little pop culture for you. So we're expecting a lot of snow. I literally spent, after men's group this morning, from 7:30 till 11:30, I went out and did a lot of things. I actually found kerosene. I've found that in years at Tractor Supply. Lance, come on, it's not going to be that bad. What if it is? So that's what the man in this house, so that's what I see my responsibility is to make sure that my family and my extended family is taken care of.
Lance, what year did you move here?
1996. So this will be the most snow that I've seen in 29 years in one sitting, if it happens.
But you were here for the ice storm.
Yep.
I was not. I moved here a year or two after, and we had friends who had moved here right before us. And one of the things they told me is make sure you have propane tank. Because if you can't cook, you can grill. But, I camp, and Tim's Mr. In case of. So, we have all of that stuff. But we're talking about going down to the lake because I have a gas fireplace there. And we just kind of want to be cozy and play and run around with the dog out there. Last year, the snowstorm was pretty big, and that was a good one. I don't know. I thought it was supposed to maybe melt off a little on Sunday because we were going above freezing.
Yeah, but that's true. And then it will freeze. And then
my redhead daughter went to Virginia to see her twin. She drove out yesterday, and that was nerve wracking. And then she's supposed to come home Sunday. So, prayers and, prayers for California too.
The fire is
go into too much of it or I'll start crying. It's very tragic.
By the time people watch this, they'll have a different perspective of everything we were just talking about, including the outcome of the football playoff series.
Oh my good God, I know. So, if we have a game, Mark, what's going on with your Texans? Yeah. We might not have a game because it's all snowy down there.
All right. I wish I could get him in the middle, Jennifer, and we could squeeze him. We've got a Texan on the left there. We've got two Buckeyes on the right. Listen up, mister. Listen up. So, Buckeyes meet Texas Friday night, and then tomorrow night, Thursday night, if that happens. And there's supposed to be so much snow in Texas, it might not happen. And then tomorrow night's Penn State and Notre Dame, two American icons meeting up. Should be fun.
I don't have a dog in the hunt, but I'm rooting for Notre Dame for my friend Kelly.
Okay, very good.
Yeah, I kind of want Notre Dame to win.
Well, I'm going to go ahead and get started here today. Yeah. I'm going to speak about loan programs and calling it At a Glance with Lance and loan programs. Right. So I'm going to try to share my screen, and I'm going to need a little help from my crew, and we'll blast through this, and we can talk about a few other things. So I'm going to go to present. I'm going to go to share screen, and I'm going to go to Windows, and then I'm going to go to, you should see At a Glance. Now, I should be able to make the.
Which era the dog is in the house today? So he is wanting to go outside and chase a squirrel he sees. So I apologize for any background chaos.
Not a problem. You should be able to see the screen. I'm going to remove the keys to home.
Yep.
So that we can see some things a little bit better. So give me 1 second. How about that? Can we see the screen now?
Yeah, great.
Great. Awesome.
All right. Loans at a Glance with Lance. Of course, I work for Fairway Independent Mortgage Corporation, part of the church team and the Lucky Dog team, which is my group, which we'll introduce all of them a little bit later. So let's see if I can get this to, all right. Nope, I didn't want to do that. All right, let's talk about loans. So there's lots of different loans that are available out there. So loan comparison. So when you hear people speaking about mortgage loans, there are so many ways to get things done. You know, I learned a lesson a long time ago. I've been doing this. This is my 25th year originating loans for people. But one of the hard lessons I learned was that a lot of times when I thought I couldn't do something for someone, especially early in my career, I found out later that other people actually did do it for them. And that was never something that I liked to hear about. So that's because I didn't know all my products. And a real good friend of mine named David Bouvier, you may watch this someday. He said, Lance, you're all the jazz hands and the smile and the winky eyes, that all works great. But if you don't know your products, you're always going to be losing second place behind me. And I took that as a challenge. Can you all hear me?
Yeah.
Okay.
Yeah.
So over these 25 years, I've gotten pretty darn good at my product. So I'm going to blast through them really quick as take a glance with Lance at these programs. So here they are. Jennifer, if you want to interrupt and ask me a couple of questions, you are welcome to do that. Okay. So it's a loan program comparison. So there's 5 different types we can talk about. There's conventional, FHA, USDA, VA, and jumbo. So what's a conventional loan? A conventional loan typically has a lower interest rate, fewer penalties and fees, options to buy second homes or investment properties, and comes with fixed or adjustable options. It's best if you have good credit and sometimes a larger down payment.
20%, right? That's required. Absolutely. I know this.
Absolutely not, ma'am.
Oh, God, Buzz.
5 or 3% down on a conventional loan, and we will break out that later. And that's great that Jennifer brought that up, because that is a misnomer of the industry. A lot of people, they just think, even with the internet and social media, people are like, I got to have 20%. Or their parents tell me, you got to have 20%. It's not the case. There are a lot of programs out there, including the next one, FHA, the Federal Housing Administration, offers fixed and adjustable rate loans with low down payment options, as little as 3.5% down, and or it can be 100% financing when combined with maybe a bond program or a local group that's helping someone get to 100% financing. In Tennessee, we call that the Tennessee Housing and Development Agency, and there's several others in the state that you're at. It might be the Illinois Housing.
Yep. Ohio has Ohio one.
Absolutely. Flexible income and credit requirements, which are less stringent typically than conventional above, and it's best if you're a first-time home buyer, have limited amount of funds for down payment. Let's stick with when I said Federal Housing Administration, you must have thought, well, that's federal. So is the next one, USDA. United States Department of Agriculture has fixed rate options that include no down payment loans. They help people with low credit requirements and or people that need flexible underwriting requirements.
And that's way out in the boondocks, right? It's like way out in God's green earth, right?
No, it is not always way out in that. We should check that by checking with your local loan officer.
You know what's funny?
Say again.
What's funny is when I started in real estate, my first listing was a rental in Spring Hill, Tennessee. And I would ask people, why are you renting, not buying? I don't think I can afford to rent. Well, Spring Hill was USDA eligible until June of 2016. They hit a population density that popped them out. So I got a ton of people. Mount Juliet, even up to a couple years ago, was USDA eligible. And Murray County, all except Columbia. So it's really important that Lance knows the program, but that your realtor knows where you can look for that too.
Absolutely.
Mm-hmm.
Which there's a map that helps.
Is this still seeing all of us?
Yeah, just jump to all of us.
Okay, it went back to all of us. So let's find out why it's doing that.
I thought you did it because I was interrupting like a mad
I wanted to.
Move.
I sincerely apologize, but now I've lost it completely. So let's try it one more time.
Sorry about that.
No, I did it. Wow, this is the strangest thing.
USDA is a great program while you're looking for that. I mean, I've done a number of those for my clients. All of Marshall County is. I play in the country, so it's a program I love.
Absolutely. And always check with your loan officer or your realtor. And sometimes those things change. Let's get to the fourth one, VA, Veterans Administration. Fixed and adjustable rate options, low to no down payment. Typically, it's used for this. There's 0 down payment. Guys, a lot of people don't know this, and Jennifer, we should do a campaign about this. Mark as well. You can use this up to $1.5 and $2 million homes.
And you can use it more than once.
Absolutely. It can be reestablished. You can move it. You can have several different VA loans at the same time. Why I brought it up about the larger loan amounts, like Jennifer was talking about, when I first moved here in the 90s, when I moved to Tennessee, and I bought my first house in the late 90s with my wife, the VA limit was so low where we live here in Middle Tennessee. it didn't meet the price of the home I was buying. I was very discouraged. But now, as I was saying, it can go up to $1.5, $2 million. And most of the people, or a lot of people that buy in that price range, don't even think such a thing would exist. So I think if we spent a little time talking about VA loans, Jennifer, to that subset, I think we'd have some good returns on that.
Are you going to address appraisals later, or should I jump in with my rant on that now?
Go ahead. It's not a product, but you're welcome to talk about it.
Okay. I'm going to try to maintain my calm on this. The number of people who say to me about a VA loan, if I have the buyer, we don't want to accept a VA loan. Okay, I'm going to edit a whole bunch of military adjectives, as my family calls them. They don't have skin in the game. BS. The skin in their game was their willingness to go out and fight for us to be able to sit here on our fat behinds and do what we do. Additionally, many of them have come back disabled to some degree. I don't know if I know anybody who served who is not disabled to some degree. And that was something they were willing to do. That was their skin in the game. Secondly, oh my gosh, the appraisal conditions are going to be horrendous. I'm going to be required to repair X, Y, and Z. I have had appraisal conditions on FHA more often than VA. I have had appraisal conditions on conventional, which is not very usual at all, but I've had it. Oh my gosh, it's going to underappraise. Did you know VA is the only one that it can't come back as a surprise under appraisal? They have to declare Tidewater if the VA appraisal doesn't see the number on the contract matching what he can find appraisal comps for. He has to call the list agent and the buyer's agent and say, help me, help this veteran get this house at the price you're all assuming it should be. And then we have to come up with the comps that we should have done ahead of time to be able to substantiate our list price and our offer price. My rant is done. I apologize.
It's okay, Jennifer. We see it a lot. And when I talk about promoting VA products, when I talk to a lot of realtors, they will sit forward and say, well, I was trained that VA loans are really difficult to work with. They come back with all these conditions and the appraisals are it really isn't the case. So
no, I left the association I was at for realtors and went to another one because of that.
I get it. Another product available are jumbo loans. So those jumbo loans are for those above a limit that has been set for conventional FHA. So here in Middle Tennessee, I mean, years ago, it was $300,000. Then it was $417,000. Then it was $600,000. Then it was $800,000. Now it's $900-some thousand is considered a conforming loan. So anything above that for jumbo, we have fixed rate options available for that. You can have a low credit score on some select products, and it's available for first time and repeat home buyers. It's best for people who are looking to finance a home that's above that limit I was just talking about. Typically and historically, rates for jumbo loans were a little bit higher than conventional, but nowadays they're kind of the same. And particularly in our market where we live, $1 million. I mean, what's that going to get you, Jennifer? Realistically,
it's not uncommon.
Not at all. So I wish that wasn't the case. All right, let's see here. All right, so let's do a little overview on conventional Fannie Mae and Freddie Mac. Can y'all see that in front of you?
Yep.
So Jennifer said, oh, you got to have 20%. No, you don't. You can have as little as 3%, 5%, 10%, 15 or 20 or more. And if you put down 20% or more, you can avoid private mortgage insurance. Asterisk beside that, you can actually buy your way out of private mortgage insurance. Maybe we'll do a training on that. These numbers need to be updated about with the single mortgage limit. It's no longer 726. We're at 984, I believe, here. Credit score for conventional typically bottoms out at 620. Jennifer, what are we doing? We need to go below 620.
If it's below 620, then we usually are going to refer them to Mark, I would think, so that you can work with him and you particularly on the algorithms on how to get their credit built up in the quickest time based on what the auto reporting is saying.
Or we'll pop on over here to FHA because FHA.
Oh, unconventional. Yeah, my bad. Sorry.
Go down to 580. So qualifying ratios, those are what the debt to income ratio, housing ratios, things like that is per the automated underwriting systems. We have an idea of what it is, but we load everything into what's called an AUS. Jennifer, you remember that in loans we've worked together. We're like, we can't make it work. We can't make it work. The AUS doesn't like it. Then that's the loan officer's job to work with the team to find out what is going to make it work. Maybe we need more assets. Maybe we need to improve credit. Those are the type of things that your loan officer does in conjunction with your realtor. PMI is based on credit score and down payment, and mortgage rates are based on their credit score as well as other factors. Jennifer, what do you think would be some other factors that might determine what a mortgage rate would be besides the credit score?
What a mortgage rate would be besides credit score. Perhaps assets available.
Assets, type of home that you're buying.
Mm-hmm.
What, for example, condominiums are considered more risky. Risk is equated with rate. So when you see a higher rate, it's a higher risk. Whether it's
and that's condos, not townhomes.
Correct. Townhomes are considered single-family residence, so they're the same as a single-family home. Home usage is a difference. Is it going to be an investment property, or is it going to be the primary home? Those are risk grades, like a giant life insurance policy for the investor that's investing in the loan. And when we talk about Fannie and Freddie, when I say that, that's who the investor is. It's Fannie and Freddie. Right now, those are in receivership and operated by the federal government. They once were private companies, and there is a path and plan to get them back to private ownership. Another fun thing on this screen to point out, at the bottom right, I'm moving my mouse, it talks about seller concessions. And that is how much that the seller can see. So Jennifer, you and I are working on one. You got a contract today. We're getting 6%. Had the borrower put down an additional 10%, you could get as much as 9% in seller concessions. Jennifer, what are seller concessions?
Seller concessions are assets from the equity of the home that the seller decides to give to the buyer in situations. They can cover closing costs, title, prepaid points, non-allowables is how we usually write it, but it also can cover buyer's agent's compensation, but those do not offset against the percents that you're speaking to.
Got it. And Jennifer, buyer's agent compensation, listing agent, those are things we're going to want to talk about soon.
Yep, special sessions on those and PMI and getting out of it, and Fannie and Freddie privatizing. I've made notes on those that we're going to do special breakouts of those.
Outstanding. Conventional loans also allow for gift funds. They're allowed to be used towards the down payment or closing costs. And second, there's different requirements for second homes and vacation homes. Investment properties have different down payment requirements as well. So for Fannie and Freddie, they typically don't have an income restriction. They can't say, well, you make too much money to qualify. They typically don't have a location requirement. It needs to be in the contiguous United States. Sometimes we run into problems in Hawaii. I've never done a loan in Hawaii or Alaska, and there are no purchase price restrictions. There are loan restrictions, but nothing. They can't tell you that you can't pay XYZ for it. All right, the next kind of loan we're going to talk about is FHA. FHA, as I talked about, much less down payment required, 3.5%. The maximum mortgage amount is decided here, and it depends on the area of the country you live in. So here in Middle Tennessee, that limit, I believe, is in the high 984, I believe. But there are other markets just to the south of us in Alabama where it drops down into the 300s. And that's because that's what the average pricing is down in those areas. So they're not going to allow people to borrow $900,000 on a market that's only $300,000. There's a lot of other things that go into that. So credit score requirements, as I told you, will go down to a 580. Ratios, they're also going to be determined by the AUS, the automated underwriting engine. In fact, we use Fannie and Freddie's engine to help us determine this. PMI on an FHA loan is 100% required. You cannot get out of it. Okay. It is the pay to play, as I say, is 1.75% of the loan amount. So for every $100,000 that your borrower or you, borrow, you're going to pay $1,750 in an upfront premium to the federal government to help insure that loan in its future. You'll then have monthly mortgage insurance payments. Doesn't matter if you put 50% down or 80% down, you are going to have monthly mortgage insurance. However, that pricing is based on how much money you put down. Now, Jennifer, that might be new to you. I don't have your camera up in front of me, but you might have raised an eyebrow. When you put down a larger amount, like 30 or 40%, it's a slightly lower rate. Okay.
And those no longer roll off. It used to be that once you could show that you're at 20% equity value owned in the house, but now you have to do a refi to get out of an FHA.
Absolutely. It never goes away.
I think we should do a breakout session on, like I said, PMI, getting out of it, who can gift funds. Also, I put down reverse mortgages. Lots of fun things you get to teach us, Lance.
Yeah, I love it. Off to the right here, seller concessions. Look, it's a flat fee. It's 6%. So if they're putting down 3.5% down payment, guess what? The seller can contribute 6%. Now, that 6% cannot go towards the down payment. That has to be different. We'll talk about that. All types of gift funds are allowed. But look at under miscellaneous, second homes, vacation homes, investments. You can't do that with an FHA loan. There's no income restrictions. There's no first-time home buyer requirement. it says that non-occupying co-borrowers are allowed for qualifying purposes. By the way, you can do that with conventional financing as well. You can purchase a 2 to 4 unit property so long. Remember, it says up a little bit higher that you can't do investment homes. So Jennifer, how could your client buy if I said that they can't buy an investment home, how in the world could they buy a 4-unit property?
Because they need to occupy one of the 4 units.
Bingo.
And that is a stellar way to do things.
It is, and we don't see enough of them.
We don't have a lot in this area is one of the reasons. And they are so desirable multi-units that they often go to investors who are, quite frankly, very well qualified or cash.
Yep. A person can only have one FHA mortgage at a time, but there should be an asterisk behind that. And that is that if you're required to move for a job more than 50 miles from your previous location, you can have another FHA loan. Did you know that, Jennifer?
I think I had heard that one time.
Moving on, no location restrictions except the United States and no purchase price restrictions. Let's talk about USDA. Now, I'm going to be straightforward and transparent with you. I've only done one USDA loan in my life. I have an incredible team, which I'm going to talk about later. So this is probably someplace where Jennifer, who has done a lot of them for her clients, might jump in. But here's my overview. There's no down payment required, so you can do 100% loan with USDA. There's no purchase price limit. Mm-hmm. You have to check with your loan officer about the latest FICO scores. They are not going to go down to 580, but they are flexible with their credit guidelines, and the qualifying ratios are going to be based on the automated underwriting. You can have 6% seller concessions, and you can roll the closing costs into the loan. Mm-hmm. Closing costs can be financed into the loan. Did you know that, Jennifer?
I think I did know that. The things that hang us up sometimes on USDA is the location, and literally one side of the street can be in and the other not, but also that the seller can't or the buyer can't make more than a certain amount of money. And if I'm not mistaken on USDA, and I'm really 99% sure, anybody in that household's income counts, because I have had situations where I'm going to move in with my girlfriend. I'm like, well, okay, well, are you engaged? Because unless you're 100% sure that you're moving in with your girlfriend, you can break up, 2 weeks before closing, and then your whole thing is, skewed.
Yes. Well, you hit the nail on the head. There are income restrictions. Okay. You can only, if you make too much money, you're not eligible, or if the people in your household do.
And is that one of the ones where, like, if you have a child over the age of 18 and they're earning income, is their income?
Yes.
That's what I thought. It's anybody in the household, or if you are multi-generational living with an adult parent who's retired and they have income. So it's a great product for specific people. And
that's why we have such a plethora, plus a playing deck of things that we can offer all of you listening and watching to this call, and realtors and people that Mark will be assisting. Mark, are you liking some of this information?
Yeah, absolutely. Learning a lot. I'm just, I've been very quiet because I'm just taking it all in. And, but yeah, learning a lot about it.
All right, let's go on to the next one. Let's talk about the VA overview. Oh gosh, this person's calling me. Let me tell them I'll call you back. All right, so no down payment required. There's a star by that. It says at the bottom, a down payment is required if the buyer doesn't have their full entitlement. So Jennifer talked that a little bit earlier. I've never run into one of those. We usually can get their reinstated, their entitlements. The VA is wonderful. This is probably one of the absolute best products. It is the best thing for veterans. I'm retired Air Force, and I've used this product several times. And it's really misunderstood. Jennifer and I were talking about that a little bit earlier. Realtors don't understand it. Consumers don't understand it. Some realtors don't understand it. Many consumers don't understand it. Many veterans don't understand it. So no down payments required. 100%. You do a $1 million 100% loan. Maximum mortgage amount in 2022, it was $2 million for a single unit, and higher allowance for multi-unit products. Scores, you're going to be looking about the same as FHA. They won't go down to a 580, they're in the 600s. Flexible credit guidelines, automatic underwriting. The seller is allowed to pay for the closing costs under selling concessions. The funding fee, every VA loan has a funding fee unless the veteran is 10% or more disabled, and it is completely waived. There's no monthly mortgage insurance. So essentially, you're getting a 100% loan at a very attractive rate, the same as or better than conventional or FHA, and you don't have mortgage insurance. And the reason why is that the VA is insuring against the loss of the down payment. They're not going to cover the whole loan. They're only going to cover the risk that's associated with it. And we'll have another training about that. Gift funds are allowed for down payment. You can't use this as a second home or investment properties. Asterisk, Jennifer, stay on hold for 2 more statements. There's no
we found
income
out tricks,
restriction.
didn't we?
There's no first-time home buyer requirement. And when you tackle it with what Jennifer's about to talk about, you can use it multiple times. However, there is a funding fee that does increase unless you have some sort of disability. Additional benefits may be available for disabled veterans. Jennifer, no second home, vacation home, or investment properties. Asterisk what?
2 situations that I know of. The first, did you know that our military is transferred from base to base a bit?
About every 4 years.
Yeah. So if you've bought a house in, say, Clarksville, and you get transferred down to Alabama because you're going to go through some helicopter training, you can rent out the house in Clarksville and then still have your eligibility. But it's a % of what you didn't use. Is that right?
Correct. And
Okay.
It's a
The
full
others-
training. It's hard to understand, but I have clients that have bought 4 or 5 homes over 20 years with their VA entitlement.
And if you needed to free it up, you could potentially, if you've gained equity, refinance that as a conventional.
Or sell it. But eventually, they have 2 or 3 investment properties and they retire with that Merkle like that. They retire with these homes free and clear and a source of income.
Right. And if they're intelligent, they've done 20 years at least as a reserve, and then they've got 80% of their income.
Mm-hmm.
So good way to go. And thank you for doing it for those who have. The other one that we discovered a few years back is we had someone who was retiring. And they wanted to buy, they were in Texas, and they wanted to buy a house here ahead of their retirement. And that we were trying to decide if family could live in it ahead of time. We found out that you can purchase a second home with a VA loan if you have put in your retirement documents, and we have access to seeing those documents. And I believe no one else was allowed to live in that house. It couldn't be rented or anything like that, but you're buying it to maybe because there's a house you want or need, or you're trying to get it before the prices have gone up, or some of those things. And that was a real eye opener for us.
Absolutely. That's called an ETS, early this year, estimated termination of service. Sometimes you'll know you're going to be ETSing is what we call it, 6 months out, and you had an opportunity to buy. Why not be able to take advantage of that? And that's what you came across. So kudos to you on that. Let's jump to jumbo loans real quick. Typically 10% is required. I've seen some lately with as little as 5. They're getting a little bit more aggressive because, like Jennifer and I were talking about a minute ago, $1 million home or $1.5 million in the area that we happen to live in several areas of the country, that's not some grandeur thing anymore. It's unfortunately supply and demand. And
it's not Richie Rich.
Right. There's some investors that want to get in that market. They're making it possible. And they typically don't have MI. Right now, the maximum mortgage amount still is $3 million. You have to have a minimum credit score of 680. I used to work for the big banks for 10 years, and they wouldn't touch anything below a 720. So this is a good product set that Jennifer, looking into to find buyers, I would love to help them. That's something else we could educate people about. Loan to value can be as high as 89.99%, and there's 15, 20, and 30-year fixed rate terms. So real quick, the home buying process, Jennifer, if you don't mind, and Mark, you don't mind me going through this just super quick.
Yeah.
Pre-qual, that's where I meet the client for the first time, and I collect all their documents. And I mean we'll talk about that, but I mean their documents. I'm getting their income documents. I'm looking at their credit. I'm looking at their reserves, so that when I tell Jennifer, next one, home search, that she can go out and look for a home for someone, she knows that they're 100% ready to go unless they quit their job or something horrible happens. I do my pre-qual and my loan application are the same thing. So then Jennifer goes out, does the purchase price negotiation. They put the money down for the earnest money. That's when I have to send disclosures out. So Jennifer sent me a contract this morning, and we already have disclosures going out on that today. We have federal law says that once I've got a contract or I've got an address, I've got 3 days to get those disclosures out. Also today, or once those disclosures are signed, there's a form called intent to proceed in those documents. With that, I can order the appraisal. Jennifer, we had an appraisal that we ordered yesterday that came back today. So those things are turning pretty quick now.
Right. And that speaks to the slowness of our market, because that was not the case in 2017.
Oh,
21.
no.
Nope.
No, 2, 3, 4.
But those
5.
are things that I need to know when I'm writing a contract.
Yep. And that stuff I tell you is how fast, Jennifer, if it helps to negotiate, let's do it quick.
Absolutely. This one we're closing in 3 weeks. Woohoo!
Yep. And so we talk about underwriting. Remember, almost everything we saw had automated underwriting, correct? We were going to look at that automate. So what underwriting's purpose is to double check, look for the small i's to dot and the little j's to dot to make sure that Lance and his team did their job and fulfilled everything within the automated decision. They're the last, the underwriter's the last stop. They're going to approve it or disapprove it. They're going to send it back to me, and it'll go back and forth a few times between here. They'll send me my approval. Hey, except you need this, that, and the other. Finally, they'll give me my final approval, and then we'll send out the closing disclosure 3 days before closing. Then we send out the closing docs, the money, the day of the closing. This is a little different. I don't know if you know this, Jennifer, but we and most every company in the world is not going to wire the funds on this until the signatures are on the piece of paper. Did you know that?
It's not going to wait at title anymore.
No, it typically won't release the fund, or they'll send the money and they won't release it.
Yeah, sometimes it'll sit at title.
What's the final closing steps where you meet and sign? So most of ours, Jennifer, I think you've seen a little bit of this, about 80%, 90% of our docs are electronic now.
Yeah.
The only thing to really sign in person anymore, it's called a hybrid closing, is the deed of trust and the note, and sometimes some local or state documents. I will tell you, 5 years ago, I sat with title agents and Jennifer and others, and we're like, when are we going to get to this electronic? That'll never happen. Well, we're here.
Yeah.
Helpful do's and don'ts when applying for a mortgage: do keep all of your original documents of everything you have. Provide your earnest money and deposits from your personal accounts. Notify your loan officer if you're going to receive a gift. Notify your loan officer any type of employment change, whether it's a promotion, anything, a transfer, anything. And
we're doing a whole episodes on things that you don't want to do.
Absolutely. So those are the do's.
I think that's in 2 weeks.
Yeah. Don't close any asset accounts or transfer funds without talking to me. Don't deposit monies outside of your regular payroll or personal property without talking to me. Don't change jobs. Don't make major purchases. Don't go buy a car or furniture for your new house without talking to me. Why am I saying that? Because that could affect your approval. When you buy a car, finance it, or have different types of income, remember that automated underwriting engine findings? We've got to do it to the T. And also another job of the underwriter and the mortgage company is to make sure that contract that Jennifer helped write and bind is followed to the T. The title company and the bank lender are responsible for that.
Well, and you run the credit a second time towards close, right? To make sure
right before the close, to make sure that no one has jeopardized their approval.
And if somebody volitionally does that, they have changed their income or their credit picture so that it no longer qualifies, they can, per the terms of the Tennessee contract, lose their earnest money.
Yep.
It's usually 1% of the purchase price. That is what we call a bad decision.
Yep. That bottom line, don't open or increase liabilities, including credit cards, student loans, or other things during the process. So, guys, we think our way is the fair way. We keep the process as simple as possible. We provide available application options, whether in person, on the phone, or securely through our mobile app, which 99% of our people use their mobile app in these busy times. Our mobile app also provides great tools for the consumer, and it helps Jennifer and the realtor know exactly what the process of the loan is and what's happening, as well as a portal to upload documents or get things signed in a streamlined manner. The fair way is to offer loan products that meet the needs and goals of everyone involved and help them make informed decisions by educating about the loan options. We're going to guide you through the entire loan process from after closing and beyond. And beyond. I want to talk about that with Jennifer and myself. We both believe in the beyond part of that. Jennifer constantly will call me and say, hey, this customer of mine is having a child, or hey, let's make sure we reach out to them, or did you see what happened, or let's do an appreciation night, let's take them to a baseball game.
A tornado went through and I call my clients, are you okay? Because I saw that it was at your crossroads.
Yep. We're not, both of us, all of us, Mark, all of us on this call, we're professionals. This is our profession. It's what we're doing, and we own it. Lastly, we offer a wide range of other product. We do offer ARMs, adjustable rate mortgages. I honestly have not seen one closed on one in 10 years.
Yeah. You do doctor loans?
We do doctor loans. We do
construction.
We do construction. There's asterisks behind all of those, Jennifer.
Yeah, exactly. That's what I thought. But I mean, if you can't, you connect them. But
I have partners, absolutely. I never want to let it get out of our control. I never want, because I'll never see them again. I want to help these people.
Yeah, and you want to make sure that it's being done to your standard if it's not a product you personally carry.
Yep. Well, I didn't mention it, but lastly, we do reverse mortgages, which are an absolute incredible product. That's a whole nother.
Yeah, we're doing a whole episode on purchasing with a reverse mortgage, not just refining, but we'll talk about both.
So that's me on the screen there. That's my team at the bottom. All of us work here in Cool Springs, and between the 8 of us, we can get this done in 10 days if needed. And we have rave reviews, and wow, what an honor to be able to work with Jennifer and Mark and all the clients that have been referred to me over the years. So hope that was helpful for everyone.
Definitely.
I didn't have the screen on me and my bad eye here. For the viewers, I've had 3 eye surgeries in 6 weeks and can't basically see out of this eye, just there.
Yeah.
Don't get old. I didn't have these bags 6 weeks ago.
So special sessions too. I want to talk about those that we have coming up. We're going to talk about buyer's agent compensation, getting out of the PMI, Fannie and Freddie, maybe going private, who can gift funds in what situations and for what purposes, reverse mortgages. And then did you think of any while you were talking, you guys, because those were the notes I made.
So the thing that really stood out for me in how this can work in my business is the amount of percentage that you want to put down as a down payment. That becomes a goal. That becomes a absolute, the framework that you laid out, the 620 credit score, those minimum requirements. When we're starting to talk about, hey, we want to put 3% down. If you're looking at a $400,000 house, we have a goal of $12,000 that we need to save just for 3%. 20%, or 5% would be $20,000. Okay, so now we have a
closing costs depending on the market. If it's a seller or buyer, plus a buyer's agent compensation depending on the market.
Correct. So we now have, if you're out there looking for a home, now you understand. Now we have a percentage of and a dollar amount that we need to apply our savings towards in order to get into the home. That's just one of the costs. But as you just laid out, Jennifer, there's other costs as well. There's closing costs. There's appraisal costs. And there may even be a survey cost. Or something like that.
Septic inspection.
Yeah, exactly. So these are the beginnings of anyone that's listening to this right now saying, Mark, I want to get out of debt. I want to handle what, take care of what my finances are so I can buy a house. Okay. Now you understand that how much do you want to buy for a house? What does that look like? Now we know anywhere from a 3 to 20% down payment that we can apply towards a loan. Now we have a dollar figure that we can go after.
Yeah. And if somebody was watching this and they thought that they had to have 20% down and they're sitting on 15, we'll tell you the best way to do that. Is it to buy out the PMI if you can, or is it to put down 5 and make extra payments so you're amortizing and you're getting it paid off earlier? Those are things that we can help people with if they've ended up with more money because they thought they needed yet more. Right. Also talking about things that are upcoming and money and budgeting. Next week, Mark, you're going to talk to us about budgeting, not to get to the home, but to stay in the home. How do you budget for repairs? What are you doing with all of those things? Then after that, we're going to talk about problems that arise during the purchasing process, both that the buyers maybe do and we need to avoid doing, or just situations that come up. And then after that, Lance is going to talk about problems in lending, like, when someone goes out and buys the new car or opens the Ulta gift, the credit card or whatever. And then after that, we'll talk about setbacks in budgeting. And what do you do when you have an extenuating situation come up without letting it completely derail you, so that you can stay on track, but overcome whatever it is that has hit you. And then we'll do a special marketing, what's going on with the market in one of these breakout sessions. Then I think after that, it's special guests, perhaps starting with title.
Yeah. Sounds great, Jennifer.
Yep. I'm enjoying this. I hope all of our watchers and listeners are. You know that you can find us on Facebook, LinkedIn, YouTube, and then we can email the links out to you as well to connect to one of those. But please feel free to text us, direct message us, or comment if you have questions or something that you want us to cover, even if you're seeing this, a year and a half from now, because we're intending to kind of cycle through these topics. We've got about 10 to 14 topics. And then, one of those is like what's going on now or some unusual things that we've determined we really need to talk about. Anybody else have anything more?
I don't
know. No, ma'am. I'm looking forward to starting to do these live as well.
Yes. Yeah. As soon as we get a certain number of watchers and followers, I think we can do that. Well, I guess that means I'm going to run to Kroger and get some V8 juice to make leftover vegetable soup from the pot roast I have in the crock pot.
Pea bread.
I bought rosemary Parmesan bread to go with this pot roast tonight. I'm so excited. Oh, and Mark, I tried to make your cookies. The filling turned out super well, but I'm used to making a very delicate dough. So when I rolled the dough and did it wasn't enough to hold the nut mixture in. So I'm going to fiddle with the dough and maybe make it a little stronger dough. I think I need to add a little more flour. And maybe work it a little more so it's a little firmer, and then I will still try and get you some rolls.
Man up on that dough. Man up. Delicate flour stuff. We're out of here. Y'all have a great week.
See you guys. Stay warm.